Oh my. Whoa. Whoa, we are back online live. Let's get this show going. Well, let's go back to some stories. Welcome back. I'm sorry for the delay. And we are going to change some things. We have been waiting for this too long. And now we're going to broadcast something about gold is going up. And I know everybody will tell you this is a cap and handle formation and everything's going to be fantastic. I made a live concert in February called the Silver Fever Slayer to destroy all the expectations about a crazy bullish movement in silver when it was 28. That was at the beginning of last year, so it happened 1 year. Now we are making a quick concert, and I was calling all the Wall Street silver people to stop buying silver for 28 because it was going to crash, and it happened. And we have this Ukraine COVID in the middle story, and now we are seeing a beautiful cap and handle formation. This shape we are seeing in the gold monthly chart. That is what all the silver gurus will tell you now, or should be telling you. This is a technical analysis chart of the patterns, bullish pattern seen in the gold price. So if you are watching this and you know my history, I made Silver Fever Slayer just to warn about the silver gurus that will tell you all was going to be happy, everything was going to be fantastic, and you can see the video called How to Be a Silver Guru in 5 Minutes. I made that playlist just to make fun of all the excuses and all the speech, all the sales speech lines they use. And we have to be very careful because gold is in a bullish pattern, yes. And I was watching the action all the night. I didn't sleep, so I was watching all the night yesterday. And what we saw, what I have been watching in the price of gold, this formation you see here with like a doji candle with a big high related to the price, big high bar here. That was on the 24th of February. The side of the high-low spread against the open-close spread was so high, it never happened only in 2006. So it happened way before that. After that pattern, gold went down a lot. That was in 2006. There was only one day in 6,000 days I detected this pattern, so I know it was going to be quite bullish. So I shorted the market. Everything was okay. At the moment gold was facing the resistance, the support around 1886. There was no way to cross that level, which was in other moments very easy to get destroyed. If gold was going to get destroyed, it should have go way to 1840s, and it failed. So we are seeing continuous defense of the prices of gold and silver higher and higher. We are seeing complete defense, and the buyers, it keeps going up. So we haven't seen yet what will happen with gold. The same happened with silver. Silver rejected the 22 level too many times, so it looks like silver is being strong by, and it is a lot of strength around the 22 area, which is now the key support for silver. And they will tell you that you are seeing the W pattern here. If you check the W pattern here, you will see that also is a bullish pattern. You will see that the theory in the technical analysis charts is that between this WB formation you are seeing here, you should expect a movement from the size of the W formation. That's the theory for the cheap technical analyst. So we should be heading to the area of 27 or 29 here, sorry. This area is the key resistance at the area of 29. What I believe is that silver rejected to go down below 24. And we have the two candles here, which are the key here. And yes, it's still in a bullish pattern, just like gold. We have a bounce here. Bitcoin was also going nowhere in the middle of a big world war. Was like nothing was going on with Bitcoin. It was stuck there. It was very boring and painful to watch Bitcoin going nowhere. So it was painful even for the Bitcoin community, because while there was an invasion, nothing was happening with Bitcoin, and they were starting to talk about no real geopolitical protection or geopolitical hedge. Yes, my filter is going on because I moved, sorry. It keeps going on. Hi Demis, thanks for your feedback. So we are going now back, and the filter should be more stable now. We are going back up again, but what's the very most important thing we should be concerned about? We should be concerned about this. We should be very concerned about the JP Morgan warnings. Yes, JP Morgan they are talking about 9 straight Fed rate hikes. 9 straight Fed rate hikes, which is clearly possible for me from historical point of view, should happen, and it could happen because we are going to see that Goldman Sachs believes 9 times to 9 hike rates. And this is possible if you check food prices continue to go up in a stable chart, in a very stable channel. So food prices are really the best hedge against inflation so far. From the stability, they have been offering stable patterns. So we have stable patterns there. If you check in the price of the Fed fund rates, the level of the Fed fund rates are around 0. So if JP Morgan is saying we have 8, it means that assuming a quarter increase every quarter, we have a level of 2-3%, which from historical point of view, it's just below the mean average. It's just below the average, historical average since 1955. This is the chart of 1955. So increasing rates, it's also very possible very possible we have this level of increasing. So it could be that the Federal Reserve will go back and attack the price of gold and silver just like they did in the 70s and the 80s. These two highs here, as soon as the United States quit the gold window, Nixon left Bretton Woods, United States had very high inflation similar to the level of April of 1973, and they control it, and then they had a big crazy moment, and this high inflation with the Federal Reserve rates were around 14, 15, 70%, and even 19%. I think it went even higher. I think it went even up to, I don't remember, it went to 19 high. I don't know if it's a quick high, but so here was the Volcker, the President Volcker, who did this crazy stuff, and he controlled inflation back to zero, the trend here, and now we should go up continuously, and this is the question: will this be enough to control inflation and get the inflation rates back to some normal, realistic levels? This is way below the real levels it should be. So we have extraordinary liquidity support, but as Michael Burry said, everything is in a bubble territory. Lots of stuff. Will Bitcoin protect you against this craziness in the interest rate? The true thing is that Bitcoin, for me, is just a tool, but we have a bigger and the more dangerous bubble, which is the sovereign debt bubble, which is multiple times, I believe is 50 times higher than the crypto market. So we have a real bubble in the cryptocurrency market, in the bond bubble, sorry. And the question is, where will that money go from now? Because they are all losing money, pension funds, all in real terms, they are all losing money. If you check who are the winners of this year, well, food prices, as I've been warning you that food will be the real hedge against inflation. Well, we have there crude oil and food and palladium are the real hedge against inflation. Here in Argentina, the level of inflation is 50%, and we expect another year of 50% levels according to the market expectations. So food will continue to be a hedge against inflation. We should expect that in the United States and globally. What is Ukraine adding to all this crisis? Well, Russia has been buying gold reserves for years. Russia is trying to abandon the US dollar, selling US bonds for years. Russia assisted to one of the Garrett Gold Antitrust Action Committee seminars, and they confirmed their presence, and they were active studying the gold manipulation stories sent by Garrett.org, and we are seeing now a bullish pattern in gold and silver. This is quite a bounce, but it should be something crazy. So I expect silver to go and retest the highs, and silver has 2 weeks to go there, because in March the Federal Reserve will come back and they have to take action. There is not real relationship between the level of interest rates and the level of precious metal should go, but if you see the euro is trashing, and other currencies like the ruble and others are under pressure. So we have to see what will happen if the Federal Reserve announces a cycle of increasing interest rates. From my point of view, silver should continue to go up until it will test the 28 level. Should go here as the final resistance, and I suspect it will be around 27, the level we should see. So we are going to watch more bullish movements but so far silver will be only in a new upper channel and not much more. I want to see what happened after that, so we should see and wait, but nothing. I don't expect a crazy run up to 40 or 30 or 100 as some bullish guys are saying. Just the normal increasing action to level of 27, and then I will ask questions and see what happens with the charts again. I've been buying physical silver slowly, but not big deal, because here in Argentina the market is too tiny and very tiny, and with the COVID crisis market went even illiquid, so it was very hard to sell some coins. I expect silver to go way to this level of 27 as the future target and not much more. How to make profits with gold and silver? Okay, you should go and try to find some gold miners that are paying a high dividend yield above 2%. That would be interesting, because if you get below inflation rates, if you get higher dividend yields, you are protected, and you will have your exposure in gold, and you will get also a nice dividend. So the secure way to get exposure to precious metals, that would be using gold stocks with a high dividend yields, if you can find them. I hope you enjoy this update, and we will be back with more updates soon. Thank you very much.